Welcome to The Explainer. Look, if you're using TallyPrime for your basic accounting, you're already doing great. But today, we're going to blow past the defaults. We're going to unlock a whole new level of business control by mastering custom voucher types. All right, here's our game plan. First, we'll get a handle on Tally's defaults. Then, we'll see why customizing them is so critical. We're going to do a deep dive into the 3 key adjustment vouchers. I'll show you exactly how to create your own, and then we'll wrap it all up into a strategic toolkit you can use like right now. Okay, first things first. Before we start building, we need to understand the foundation we're working with. Let's get into the core of how TallyPrime's transaction system is set up. So let me ask you this, and be honest. Are your Tally reports really telling you the whole story? I mean, if all your sales are just lumped together under one sales heading, how can you possibly know what's really driving your business? This is where custom vouchers come in. You know, right out of the box, TallyPrime gives you a really solid start. You get 24 predefined voucher types. Your sales, your purchase, payments, receipts, all the heavy hitters are there. But the real magic, the real control happens when you start building on top of this. And here's the key thing to get. A custom voucher isn't something totally new you build from scratch. Nope. It's really just a specific category you create that piggybacks on a default parent voucher. So you could create a wholesale sales voucher that acts just like a regular sales voucher, but, and this is the important part, it lets you track those transactions completely separately. So, okay, why does any of this really matter? Let's talk about the real-world business advantages, because this is about so much more than just keeping things tidy. This stuff has a direct impact on your bottom line. And it really boils down to these 3 massive benefits. First, compliance. You can have separate, unique invoice numbering for different GST registrations, which is often a legal must-have. Second, internal control. Imagine letting a junior staff member only enter petty cash payments, but blocking them from making huge bank transfers. Game changer. And finally, reporting clarity. You can finally see, with just a click, how your retail sales are doing versus your wholesale business. It's powerful stuff. All right, let's get into the deep end. We're talking about the big 3, the adjustment vouchers. These are so powerful, but honestly, they're often misunderstood. Getting these right is absolutely essential for accurate reports. First up is the journal voucher, your F7 key. Just think of this as the accountant's special pen. It's the tool for any transaction that doesn't involve cash or a bank account right away and isn't a normal sale or purchase. It's all about making those critical adjustments behind the scenes. So when do you pull it out? Well, it's your go-to for year-end stuff, like booking depreciation on your machines, or for setting aside provisions. It's also perfect for fixing accounting mistakes. Oh, and it's the classic way to record buying a big asset on credit, long before you actually pay for it. This scenario just nails it. See, no money is actually changing hands here, not a single rupee. You're just recording an expense, the depreciation, and at the same time, you're reducing the value of your asset. This one entry makes sure both your profit and loss and your balance sheet are telling the truth. Okay, next up, the stock journal. If the journal voucher belongs to the accountant, this one belongs to the warehouse manager. It has one job and one job only, to track the physical movement of your inventory. It doesn't really care about the money, just where the stuff is. And the secret to this voucher is its really clever 2-part structure. You've got the source side, which is where the goods are coming from, and the destination side, which is where they're going to. This lets you record a whole transfer in one clean, easy-to-read entry. It's brilliant. And here's a perfect everyday example. You're just moving some TVs from your main warehouse to your showroom. So, in the source section, you list the TVs coming out of the main warehouse. And in the destination section, you list them arriving at the MG Road showroom. Your total stock in the company is the same, but now Tally knows exactly where every single one of those TVs is. And now for a special version of the stock journal, this one's built for all you manufacturers out there. Think of it as the factory foreman's digital logbook. It's where you record that amazing process of turning a pile of raw materials into a finished product. And this is where things get really cool. You can set up a bill of materials, a BOM, like a recipe. You tell Tally that one table needs 4 legs and 1 tabletop. Then every time you say you've made a table, Tally automatically uses up the right parts. And, this is huge, it also lets you add extra costs like labor or electricity, so you know the true cost of that finished table. You see what's happening in this scenario, right? It's about so much more than just moving stock. When you say you've assembled 5 PCs, Tally doesn't just reduce your stock of monitors and CPUs. It also adds that 500 rupee assembly charge to the value of the brand new PCs. You're not just tracking parts, you're tracking the value you've added. Okay, so you've got all this great information, all these powerful ideas. How do you actually do it? Well, the good news is it's super straightforward. It's just a simple setup in Tally's master configuration. Seriously, it's this easy. You just start from the main gateway of Tally, go to Create, and then select Voucher Type. That brings you to the main screen. All you have to do is give it a name, like retail sales, tell it which parent type to copy, so sales, and then decide how you want your invoices to be numbered. That's it. All right, let's zoom back out for a second. We've gone through a lot of detail, so let's pull it all together into a simple, strategic toolkit that tells you exactly when to use each of these powerful adjustment vouchers. This table right here, this is your ultimate cheat sheet. It's this simple. If it's a pure financial adjustment with no cash involved, you use a journal voucher. If you're just physically moving your stock around, it's a stock journal. And if you're actually making something, turning raw materials into a finished product and you need to know the cost, the manufacturing journal is the tool for the job. Look, once you really understand and start creating these custom vouchers, Tally stops being just a bookkeeping program. It becomes a genuine business management system. You get clarity, you get control, you get compliance. So the only question left is, which part of your business are you going to get a clearer picture of first?